All right. Good morning, everyone. Brad Roltgen here with the Fresno Bitcoin and Cryptocurrency Investors Group. Today, we've got a follow-up meeting to last week's meeting about Lofty. The CEO, Jerry, is joining us today, and we've got some questions for him. But before we get started with that, Jerry, maybe give us a 60-second elevator pitch on, where Lofty came from, when it launched, how it's going, and, the near future plans you've got for it.
Yeah, absolutely. So Lofty is basically an online real estate marketplace. We turn equity or we turn houses into tradable tokens on the blockchain so that people can purchase real estate a lot easier in a frictionless manner and paying lower fees and eroding a lot of the middleman services that you see in the industry. So we started in 2021, May of 2021 to be precise, when we launched the first property. Since then, we've essentially tokenized over 170 properties to date, and we are launching about one new one to the platform per week. And in the future, our strategy is to take everything that exists in the existing real estate market, things that people are used to doing, investing in real estate, and taking everything that they love about the market and keeping those and amplifying some of those benefits, and then taking everything they don't like about the process and basically try to remove that completely, or at least reduce the frictions there. And ideally, long term, we become sort of the real estate super app, and we will completely overhaul and reinvent how real estate is transacted, managed, and owned here in this country. So that's sort of the 60-second pitch on Lofty, where we started and what we hope to become one day.
Great. No, that was perfect. Thank you for that. Is the platform open to investors outside of the US currently?
Yes, it is. Although we say, it's kind of up to you to figure out if your, local jurisdiction within your country, this is acceptable, what the tax ramifications may be, and any forms and things you would need to file with your home country. Sadly, there's just too many countries out there, and so we can't go through every single jurisdiction and help you guide you through that. But yes, technically speaking, you can be based in a different country and you can use the platform as well.
Okay, good to hear. Good to hear. Um, on the site, it shows that the returns for each property. Are those returns based on purchasing the token at $50, or are those based on the current market price for that token?
Yeah, that's a great question. So there's actually two returns displayed. There is a projected return, which is what you see in the overall marketplace as you scroll through and see all the different properties available on the platform. But once you click into a property, in that same upper right-hand corner, you'll notice a new number, and that's the actual current yield for the property. And so that number is live. It's based on the current monthly income of the property. And depending on the type of property, Airbnb, sometimes the income fluctuates from month to month, right? Depending on the occupancy and things like that. So that number will shift. Now, that number is actually based on the lowest possible entry price you can get today. So on our market, there's two different types of orders. There's limit orders and market orders. Limit orders are when you choose the exact price you want your order to be executed at. The upside is you can control the exact price per token and guarantee that all of your tokens are executed at that price. The downside is those orders typically take longer to fill because you need someone else to be on the other side to, buy your order or,
Right.
sell you the order that you want. So that's the pros and cons of limit orders. Then, for some properties, you also have market orders. And these market orders, if you ever bought stocks on your brokerage app, they're just the market price. There's a price that's quoted to you. And if you're willing to accept that price, you can just click the button and you don't have to wait for a counterparty to trade with you. That order just gets routed through our system automatically, and you will either buy or sell the tokens immediately. The downside to that is you don't get to control the price, right? It's all based on supply and demand, how much trading activity is happening, how many people want to buy, how many people want to sell. So the upside is you get immediate liquidity, very fast transaction speed. Downside is you don't get to control the price. So depending on the current available orders on the market, whether both including limit and market orders, our system will actually find the lowest priced order available. And that yield, once you click into a property, is actually based on the lowest available purchase price you can currently get a token at. So if that lowest price happens to be a limit order, then that's what that is. And if it happens to be a market order, then that's what that is.
Okay, so we could theoretically see that yield fluctuate quite a bit within an
Mhm.
hour or two if one of those trades went through, so that it's no longer, like a limit order sitting there to be executed.
Absolutely. Yeah. So
Okay.
it could be an extreme case. It's unlikely to happen because look, people, it's their money and this is real money. And so the idea and the hope is people act logically. So let's say hypothetically, the market is quoting the tokens, based on the trading demand at $60 a token. But someone, for whatever reason, decides they want to sell tokens at $30 a token through a limit order. Then for that brief duration that order exists, the yield quoted to you will be if you bought tokens at that $30 per token price. But most likely someone will see that immediately. They'll snipe the order because it's such a great deal for them. And then as soon as that order is gone, the new yield will be calculated based most likely on the market price.
Okay, great. No, excellent answer. Thank you. Um, it appears that there's kind of limited liquidity on some of the property. Have there
Mhm.
been like delays or problems with investors wanting to, to cash out, sell out their 2 tokens, 10 tokens, that kind of thing?
So here's the thing, we're a pure marketplace, meaning, every property is sort of its own independent thing and you should treat it as such, right? And so some properties are a lot more desirable than other properties. And as a result, have way higher trading activity, higher, token prices, and a lot higher liquidity. Some properties are, having issues where the tenant is delinquent, they're not paying rent, and owners are trying to deal with that situation. And so that relative to another property that has no issues on the marketplace, you can see how that would kind of divert liquidity away as a new user or someone coming to the marketplace. You kind of think like, why should I buy into this property with problems unless you think, the price is such a great discount that you're willing to, go through periods of instability because your purchase price is so good. So that's kind of the mentality of people on the open market. And so for some properties, you'll definitely see lower liquidity because of issues it's facing. And if you're just selling 1 or 2 tokens, even with lower liquidity, you probably won't see a major issue impacting you personally. It would be more if you were trying to, execute an order for 5 figures, 6 figures sometimes. Then that definitely would be hard, especially if the property has issues. But even then, just like any open market, it's not just an objective thing about liquidity. It's an objective thing about liquidity at what price. So, if you're trying to sell the property at $60, $70 a token when it has a bunch of issues, right? Probably you're not going to see any liquidity at those price points. But in an extreme scenario, let's say you lowered it to $25 a token, right? Massive haircut. Most likely someone's going to buy that order almost immediately. So it's kind of, up to the investors kind of figure out, what is the maximum price that I can get liquidity at for those type of properties. Now, with that said, it's more of a matter where some of these properties just don't have the market price mechanism. So remember, I talked about it a bit earlier. The benefit of a market price is you're a price taker, but you get to execute the order instantaneously. So you don't have a liquidity issue ever. That's a new feature that we launched at the end of last year. So quite literally, I think a few days before Christmas. And since then, it's increased liquidity a lot on the platform. The issue is you have to launch it, sort of enable it one by one per property. And we've had a lot of properties on the platform. And so we've been going through it. And I think out of the 125, 130 properties you can see on the marketplace today, about 50, a little over 50 of them have these liquidity pools enabled and therefore have the market order process enabled. And so for those properties, trading is always instant if you're okay with the price. We're continuously launching these. So eventually every property on the marketplace will always have market orders enabled. And at that point, it's again really more of a question about pricing. But beyond that, pretty much every property should have a fully liquid secondary market, even, especially if you're trading one or two tokens.
Okay, so sounds like 75% of the properties have those liquidity pools, and that's where the market orders come into play.
Correct.
Got it. Okay. Yeah, we didn't really get into the liquidity pools last week, but I started playing with them because I've used the pools and farms and that kind of thing on decentralized exchanges, for years. And so I'm like, wait, there's another investing opportunity kind of thing. So that's a whole nother can of worms we'll probably get into a little bit. Okay.
Yes.
Great. Okay. Currently, are your marketing efforts geared towards bringing in investors or, to purchase the properties, or sellers to put their properties on the platforms, or are you kind of geared towards both?
Well, we don't actually really do any marketing. All of our growth today has been organic. So it's it's thanks to a lot of folks like yourself, where you find the platform interesting and then you tell other people about it, and husbands referring their wives and things like that. So we're really proud of that. And I guess the only paid sort of growth we have is our referral program, right? Sort of in line with that process. And so if you refer someone to the platform, currently you can get $50 gift certificate. They get a $50 gift certificate, which then they can use on their investments. And then on the seller side, so new suppliers who have properties to list, we actually pay $1,000 to whoever refers someone, and they end up listing a property on our platform. So that is available to you guys as well. So if you end up referring someone over and they list their property to sell on Lofty, you just get $1,000 in cash. We would just send that to you, no strings attached. So it's a pretty good deal. What's really beneficial about having a marketplace in general as your product and also as a business model is all buyers are ultimately sellers and all sellers are ultimately buyers in real estate investing, right? Because it's a process. You buy something, you're investing in it, you hold it, you earn income, and at some point you have to liquidate it to realize the appreciation portion of your investment. And then if you're a long-term investor, you'll roll that money back into another property and so on and so forth. So that's kind of how real estate investing works. And so when we onboard sellers, a lot of them will end up selling portions of their property, and then with the proceeds they were planning to invest in real estate anyway. A lot of times they'll just go on the marketplace and see like, oh, well, there's all these other properties, some of them I'm very interested in, and they'll actually start investing so that the seller has become a buyer as well. And in many cases, this may or may not be surprising to folks. The last, I would say 15, 20 properties on the platform were all listed by other Lofty users. So people come to us as a buyer first. They start investing in some of these different properties, and they love the process. And they think it's just so seamless, and they've been investing for many years. And so they're comparing the legacy process to what's available on Lofty, and they just go like, oh, this is a much better way to do this. And they'll often approach us after sometimes a few months, sometimes a year, and say like, by the way, I actually own 5 rental properties myself outside of the platform. I'm thinking of selling ownership in 1 or 2 of them. Can I list it on Lofty? And we say, of course. And so a lot of times those properties then get onboarded to the platform. And so all that's to say is we don't currently run really too much paid marketing. And even if we did, we don't really need to worry too much about targeting one side of the market, because it's this big cycle where it doesn't matter which side you target, they basically add to the other side of the marketplace as well.
Right. Okay, great. What's the kind of top 1 or 2 reasons that sellers list their property? You kind of mentioned, maybe a little more seamless process, but it's not like they're selling entire property. Maybe they're selling off 10%, 20%, 30% of it. What's kind of their motivation that you've found?
Yeah, that's a great question. I can give you some specific examples, but I think the biggest generalized answer would be flexibility, right? So the thing about the real estate market is it's actually, contrary to popular belief and a lot of the stuff you see in the media, it's actually not driven as much by large companies like BlackRock, Blackstone, as you would imagine. It's actually mostly driven by mom and pop investors, much like yourself. So to give you the exact statistic that I find really interesting is that just for single family rental properties here in the US, roughly like 70% of the annual volume is driven by mom and pop retail investors, right? And the entire market is about $1.05 trillion in annual volume here just in the United States alone, every single year. There's not much volume, and 70% of that is responsible by retail investors, essentially. So, all that is to say, like, essentially, it's a great market that we're in, and there's a lot of room to expand and grow in this space.
Okay. And so it looks like we kind of looked at some of the more technical aspects last week. So it looks like there's a smart contract for each property is how that works.
Yeah, so in terms of trading, liquidity pools, market orders, all of that, it is unique to each property, and that's very intentional. We are not a fund, we are not a REIT, if you guys have ever interacted with that before. So there's no ability to sort of just buy into a pre-arranged portfolio of real estate. The idea is really, you invest in what you want to invest. And once you do, the performance of any of the other properties on the platform has zero impact on your investment, right? So if other properties aren't doing well, they don't impact you because you didn't invest in them. And the idea is you're able to construct and build your own portfolio however you see. Because again, that word flexibility and why sellers want to list on Lofty is basically the flexibility piece. So, like everyone has different investment objectives, right? Depending on their age, their background, their sort of risk tolerance. And given that, you can't actually have a one size fits all solution in real estate, which is most of what the legacy industry offers. So when it comes to mortgages, banks, all of these sort of existing services, they're a good fit for maybe 70, 80% of the population, but there's a lot of people that have very specific instances where these legacy providers can't service them. So I'll give you one particular example. One of the sellers came to Lofty because he wanted to cash out, I think it was just like 10 or 15% of the equity in his property. He needs the cash to go do something else. And it wasn't a ton of money. So he went to his bank first and said, hey, can I do like cash out refi just for like this portion? And the bank said, great, we'll happily do that. But you need to refinance 80% of your property at 8% interest rate now. That's what the 30-year fix was offered him at. And he's like, that's insane because I locked in, earlier on 2.75% fixed rate mortgage. Why would I refinance pretty much the entire thing to 8%? I just need to get this specific amount of equity out. I just want some cash for that. And the bank said, well, so sucks to suck. We can't help you because the underwriting, the process, it's not even worth our fees to refinance just such a tiny portion. So either you do the whole house or you do none of it, right? So that's when he started researching online of like, hey, there's some service where like I could just cash out a tiny portion of my property, and he ended up finding Lofty, and that's why he listed. So it just depends on each person's individual situations.
Okay.
And so because of that, sorry to kind of go back to the question is because of that, every property, legally speaking, how it's structured, how it's technically designed, makes it so that it's all separate. So separate smart contracts for separate properties, separate liquidity pools for separate properties. So this way, both on a practical and legal aspect, as well as on a technical aspect, the properties never have any connections with each other. So if you're like, hey, out of 150 properties, I only like this one, and I'm just going to be an investor in this one particular property, and I only care about that performance, then that's great. And you're able to do that. And you can just watch that property's performance, manage it, decide what to do. And nothing that would ever happen on the other properties on the platform would ever impact you.
Got it. Okay. So who controls those smart contracts? Is that something that Lofty is in control of, or who's actually in
Well, so
control of those?
So they're a little bit decentralized in the sense that, I mean, we haven't open sourced them. So, other people don't see the exact code, but they're deployed on the blockchain. And so you don't actually need our permission to interact with them. So think of us similar to Uniswap, more like a front end. So, most
Okay.
people don't know how to programmatically interact with a smart contract on chain. So it's just much easier for them to click buttons. And so we're the pretty interface that makes all the numbers easy to understand. And you can interact with the smart contracts by just clicking buttons. But if you wanted to, you could programmatically access any of the smart contracts and you can in theory trade without our interface or our involvement at all. And so that's kind of how they're designed. And so in terms of who control them, we obviously built them. And so their functionality is controlled and designed by us. Right now, there's no way for anyone else to update or sort of improve on the functionality of the smart contracts. We're in control of that process. But once they're deployed, we're sort of no longer in control of them. Anyone can use them. We can't, destroy them. We can't spin them down. They're just kind of like they're available. Even if Lofty went bankrupt, like those smart contracts would still exist. So in
O-
that sense, we don't control them.
Okay. Yeah. And that was kind of my next question, is it just from a counterparty risk standpoint, if you did go out of business, they would still be there. They would just be the need for your website to be up type of thing.
Correct. And I suspect, all throughout all thousands of users we have, many of them are very technically competent. I suspect someone else would just create a new front end interface and deploy it, and you'll be able to use their interface instead.
Okay. Okay. Good deal. Um, that was all the questions I had. Jerry or Phil, did you have any others? I know you had added some of these in here that I had gone through.
Yeah, thanks, Jerry, for coming in and
Mhm.
providing all this useful information. I'm really interested in the marketing side of it because I feel that the more people who are participating, the more liquidity we'll have on each property, and
Mhm.
that can only be good. So I'm a little curious about this organic word of mouth strategy. Are you planning on doing something more traditional in terms of, advertising, or are you concerned that you're going to attract the attention of regulators, or I'm trying to understand that.
Yeah, it's mainly a cost component, right? Like I would love to run a Super Bowl ad, but that's not a smart use of funds right now. So if I were to raise hundreds of millions of dollars from, venture capital investors, that might be more viable path. What we're most interested in is, you know, keeping Lofty's longevity top of mind. And so our biggest sort of primary objective right now from a business perspective is to reach profitability. So our team is very small, and we're very precise about how we deploy our funds. And I'm happy to report in a few months, hopefully, we'll hit profitability at the current growth rate. So that's sort of the primary reason, just fund deployment, because when you do marketing, there's always a way to calculate. They call it, CAC for short, so cost of like user acquisition costs, essentially, right? Um, and the idea is basically like, on average, how much does it cost for you to buy a new customer, right? And then the other metric you want to measure is called lifetime value, so LTV for short. And this idea is, how much does your average customer spend and how much revenue they contribute to your business. And the idea is that if your lifetime value per user is a lot higher, or ideally significantly higher than your cost of user acquisition, then you're not really lighting money on fire. You can just keep paying, like whether it's advertising, whether it's TV, whether it's like social media ads, you can just keep spending money there, because for every dollar you spend, you actually get more than a dollar back, right? But where a lot of companies run into issues, especially tech companies, is they end up, having sort of a lopsided result of that equation, where it costs them a lot more money for them to acquire a user, and the user doesn't spend enough money, over time to essentially pay back that cost. And so for every dollar you spend on growth, you do get new users, but what you end up is a situation where you only get, 60 cents back, 70 cents back. And so you're losing money when you try to acquire new users. And eventually those companies run out of money. People don't want to fund them anymore and they go bankrupt, right? And that is definitely not a fate that we're interested in at this point. And so all that's to say is we're not doing paid marketing just because it currently isn't the most effective way for us to acquire new users, even though it is organic word of mouth. And we do pay for the referrals as well. We've never lost on a net basis users on the platform. So every month there's more users than the month before. And that's factoring in, users that end up churning and leaving the platform. So that's the main reason, given that we are growing steadily and consistently and never missing a single month of, having a negative growth rate or anything like that. It just, to us, doesn't make sense to start spending lots of money on paid acquisition. There will be a time maybe when, that's why we're so interested in profitability, where once you're profitable, that excess profit you have, you're absolutely, we're happy to spend it on acquiring users because, at any point you can stop and it doesn't affect the fundamentals of your business. You don't need VC money to survive. When your company is not actually able to organically survive on its own, the sort of consensus is paying for users is just generally not the best idea.
Got it. Thanks.
Okay. Yeah, before we let you go, and again, we appreciate your time. Oh, it looks like Sam's got a question. Is that Sam, you want to unmute? Let's see, we can unmute you here too.
Myself.
Go ahead.
Okay. So with the marketing question, not so much marketing, are going to end up cross-platforming yourself, which would probably be the most feasible way of maximizing trying to get new customers? I know you started on Algorand. I think you have another blockchain that you're attaching yourself to. So what's about the cross coordinating with some other networks?
Yeah, so that's a good question. We're not against it per se, but again, it's just something where we've kind of measured the return and we don't think financially it makes the most amount of sense. The idea is basically, if you look at Web3 and a lot of these crypto businesses, again, they don't end up surviving. They're not actually viable businesses. Their entire marketing is sort of like, hey, we're doing X. You may not actually love X or find it valuable as a service or even want to pay for it, but we're built on this chain that you love. So, hopefully you'll use X. And that kind of works initially where people obviously want to support the chain that they're passionate about. But the end result is you need actual customers long-term who likes your service, not because of what, blockchain you're actually built on. So our entire strategy at Lofty has been, we're in the business of real estate. So who should we appeal to? Real estate investors. And for many of them, they don't like even blockchain, or they don't really care about crypto or blockchain at all and don't understand it. And many of them, to be honest, if you bring it up, it just like they'll think it's like a scam, right? That's like how much distrust a lot of the mainstream market have relative to crypto. And so our strategy has been to abstract away the crypto component as much as possible so that anyone can use Lofty. Like you can pay with your credit card. You don't need to interact with that. You don't need to bring your own wallet. When you make an account, it spins up a new wallet that is attached to you, and you can just operate it by clicking buttons on the platform, right? You'll see this in sort of everything we do. And the idea is, as a result, our customers don't care what chain we're built on. It's, think of it like when you use a service like Uber or something, you use it because you find it valuable to you. You don't care what database Uber is built on top of. Like there might be a superior database elsewhere, but that's just not something that you care about. Like imagine if Uber didn't really talk about their service or the benefit of their service, but they market it to you by telling you what database they use. Like that wouldn't make a ton of sense. And so we look at sort of the cross-chain strategy, with the same lens. In that short term, you're right, it could give you a small boost and sort of get your name out there, where some people, there's some crossover, they want to invest in real estate, or they already invest in real estate and they're also invested, on Polygon or some other chain. And then because there's this partnership and announcement, they hear about you. But again, that usually doesn't drive a big enough boost long term. So in terms of chain, our strategy is to just integrate it silently over time, where you can pay if you want to with sort of any cryptocurrency across any chain. Algorand, for example, has limitations on USDC access. Like a lot of people come to us and say, I have a bunch of USDC. I would love to stake or invest in Lofty, but it's on a totally different network, right? And that makes it hard to bridge over to Algorand. So our strategy there in terms of cross-chain is to just continuously improve our transaction rails so that it really doesn't matter. Like you just don't even know sometimes like where the asset is actually operated on chain wise. You just know that it works seamlessly. You can pay, with Coinbase, you can pay with USDC on Ethereum, you can pay with it on any L2 that you like, and it just works for you. And a lot of that is already in the works, and it's going to be coming to the platform soon.
Good. All right. Hey, looks like Victor has a question. Go ahead, Victor.
Yeah, sure. So my question about how can I check if the property was already tokenized, or how to check was it tokenized twice or not on a different blockchain networks?
Oh, interesting. That's a really good question. So you're like, I think the only reason you want to check is to make sure that the value accrues to the tokens that you actually own in this case, right? And for that, you can do it just like a traditional legal process. And we make all of the paperwork readily available to you on the platform. So right now, if you go to Lofty, you can click into any property, and in the list of tabs, you'll see, description, you'll see the financials, and then there'll be a tab called documents. So if you click on that, it will link you to a Dropbox folder. So in that folder, you will see every single document that ever pertains to this property, and it's updated, over time, in real time, actually. And so you'll see things like appraisal reports. You'll see inspection reports for the properties. Does it have any issues when it was first, launched on the platform? You'll see, what the appraiser thinks in terms of their expert opinion the property's worth. So you can decide if you're, actually getting a good deal or not, if you want to buy at the current token prices. But beyond that, you also get to see, the deed of the property, and legally the deed that is recorded with the government. So the government recognizes who actually owns this property. And you'll see that every single property's deed is owned by the current DAO LLC that is, operating the property. And you'll see through the smart contracts that connect the document to the blockchain in that this DAO LLC only pertains to this one particular smart contract and this one particular set of tokens. And so the point of this is all to say, that this is the legitimate legal version. So even if you do find another set of tokens for a property, but it's on a totally different blockchain, if they can't back it up with this actual legal documentation, the deed and all this connection, that set of tokens is fake, because those tokens have no real value. They're not backed by the underlying real estate, because legally they can't be. The county doesn't allow a property to be owned by multiple different entities, or rather they are. You legally can have multiple entities own it, but it will show up in the records. So in this case, you can see the deed is wholly owned by this particular DAO LLC, and that's it.
So as I understand, in any case, it should be somehow reflected in official documents what kind of tokens was initially emitted for this property, right? And it should be reflected.
Correct. It's all in the operating agreement. And the operating agreement is essentially the set of rules that you as a co-owner abide by. And these DAOs are very flexible. So you can vote to change things if you want to, and the group can vote to change things. And again, all these votes get syndicated out onto the blockchain. So they're recorded forever. So for example, if there is ever a legitimate reason and event where a DAO says, hey, we want to go to a different chain for some reason, and we don't want to be on Algorand anymore, we're setting a vote to reissue all of the tokens on this other network. And here's how many fixed supply of new tokens will be minted and which wallets will get them. That vote will actually be on the blockchain. So you can actually find the record to be like, okay, now this is a legitimate situation. If without seeing those records, pretty much any other set of tokens you find out there means they're not legitimate.
Thank you.
All right. And Richard had a question as well. Go ahead, Richard.
Yeah. Hi, Jerry. I have a question about the DAO LLC, and it's a fantastic idea that separate property have separate DAO LLC. I'm wondering, since the property owner can sell part of the property, like for example, 10% of the property, then I'm wondering what percentage of votes do they return?
Yeah, that's a wonderful question. So the whole idea of governance is that every owner has a say in the decision. Now, obviously, if you own more equity in a property, so even if someone's selling their property, once they start selling equity in the property, they're not the sole owner anymore. So if you buy even a single token, believe it or not, you're legally an owner in that property. Now it's just multiple people own the property, which is perfectly normal and perfectly legal here in the US. Now, obviously, that person owns a lot more than you do, so they get more say. But in order to keep governance fair, there's actually a process called scaling. And so it's basically an algorithm it's like very mathematical, but basically scales down people who have really high concentrated ownership and actually scales up a little bit people who have very tiny points of ownership to sort of balance the whole thing out a little bit. To give you an exact number, let's say someone owned 90% of the property, right? Someone only sold 10% equity and they own 90%. They would have 54% of the voting rights, right? So you need 60% supermajority for any decisions to pass. So in this case, someone who owns 90% of the property, should have a lot of say because they have the most amount of sort of risk on the line, right? Like they own 90% of the house. So, whether the house goes up or down in value impacts them the most. And they are rewarded with the bulk amount of voting rights, but they can't reach the 60% supermajority threshold by themselves, meaning that they don't have unilateral control over the property anymore. And that's something a seller needs to be comfortable with to use Lofty. And that means they have to convince whatever decision they want to do. Let's say they want to repaint the house. Let's say they want to convert a long-term rental into a short-term rental. They need to propose a vote so that other owners, even ones that own a single token, can read through and decide if they want to go with that proposal or not. And then the DAO can vote, and they need to convince just a tiny bit of owners to at least agree with them. And once they reach a 60% quorum, that vote will pass. And that's how these properties are co-managed.
Thank you for the clarification. Yeah. And from my understanding, as the owner who lists the property initially, and he may have most power, like for example, he is the property manager, or he has connection with the property manager. So I'm wondering for Lofty, what measures are in place to protect the investors' interest and ensure transparency? Like for example, how does Lofty ensure that the ledger, including the cost and the expenses, is accurate, is not fraudulent?
Yeah, absolutely. So two things we do there. Number one is, again, the governance system exists. So even though the seller may stay on as the property manager by default, if they're not doing a good job, you guys can actually fire them in many cases. And so far, they've all done a great job where the rest of the co-owners like them. And so that hasn't been done yet, but it's within your right. If you ever think they're up to no good and doing things in a way that doesn't benefit the other owners, so you have that legal right, you can do that. Then on top of that, every DAO has its own bank account. And so once you basically have this property tokenized on our platform, whatever system you're using before, whether it's your personal bank account, you had a separate LLC and that has a bank account, You don't really use that anymore. Basically, you're instructed each month when the tenant pays their rental income to pay that directly into the DAO's bank account. And there's no way around this. Like if you don't want to do this, don't use our platform. Don't sell on Lofty, right? And so that ensures, a huge amount of trust in the system because, the tenant directly pays into the DAO's bank account. So you know how much income on a gross basis is coming in. And then everything else gets audited by our team. So if you say, hey, the fireplace broke and I hired some contractor and it was like $900 to fix, right? We don't just accept that and say, okay, great. Like, it was $900 to fix. We're like, where is the invoice and receipt for that repair? And you have to provide that. And again, going back to what I said earlier about the documents tab, all the invoices and receipts and things like that are uploaded in there. So you can actually, as an owner, audit the trail yourself. So all that is to say, it's incredibly difficult for someone to try to falsify the ledger, right, when they're operating the property. Not impossible, but definitely very difficult. And then the one last resort is, if you're falsifying records in that regard, like that is that makes you like criminally liable, and the other owners can basically take you to court. And trust me, that's not a fun position to be in as an individual, to be sued on those cases, because it is very damaging to you personally, your career, and your assets. And so that also exists as a legal avenue. So all those combined is essentially how you can make sure that these sellers or your co-owners are acting responsibly and doing things transparently.
Yeah, thank you so much for sharing this information. Yeah, it's really smart that Lofty leverage many legal structure and the traditional bank service to protect the investors' interest. And you mentioned Lofty has the people to audit this bank account, and also I found on the website Lofty will send a third-party company to evaluate the property. And so I'm wondering, and I see Lofty's revenue model is charges 3% transaction fee from owner and the buyer. So I'm wondering, is there any other revenue come from? And also, how do you plan to sustain and grow it?
Yeah. So no, the trading fees are currently our only revenue source. And again, that was designed intentionally where, we're providing a marketplace that makes real estate investment and management easier for you. But ultimately, it's your investment, it's your money, your earned returns. We don't manage assets for you. We don't manage properties for you. And so it's not fair for us to take a cut of your income. So unlike other platforms out there, we don't charge a management fee. We don't take a cut of your income or returns for anything like that. It's just if you trade, we make revenue from you. If you don't trade, then we don't make revenue from you. Now, over time, there's a chance that we might raise our service fees for trading, but we're very careful about that. And we will only do it in the event that we think, we've really improved the platform in some way. So we recently did it. So fees used to be 2.5% per trade on both the seller and buyer side. It got bumped up actually just as of last month to 3%. So that's 0.5% on each side. Not a huge difference, but obviously at scale, that increases our revenue quite a bit. And we only did that because we introduced the liquidity pools and they started working out really well. People love them, not just like, it's still pretty crazy to think about, but for the first time in the world, and you can only do it on Lofty, you can buy and sell ownership in specific properties with a single click of a button and like have the transaction go through instantaneously. So you can basically now trade real estate as if it were a stock like an Apple or Tesla on your brokerage app. And that's just never been possible or existed before. So when we do things like that, we sometimes increase our fees. Now, in the future, we plan on adding in the idea to growth is basically, again, look at the existing real estate market and break it down by different pieces that operate within it and basically improve and overhaul every single piece, right? So we've now made buying and selling incredibly easy. You can find properties very easily. You can now buy and sell them very easily. So it's mostly on trading on transactions. The next piece is leverage, right? Most people who invest in real estate, one of the main benefits is being able to access leverage you can't access traditionally in a very easy manner for other assets. You can't really convince your stockbroker to give you 5-to-1, margin loans to buy shares of, stocks that you like. But in real estate, it's incredibly common, right? People take out, 80%, like loan to value, like loans essentially on their houses. And so we want to add those services in. And one of the things we're building out is basically a peer-to-peer lending market. So essentially, instead of leveraging the underlying property, people will be able to leverage their specific purchase. So let's say someone wants to, buy $1,000 worth of a property. They can just put down $200 and borrow the remaining $800, right? And the benefit to leveraging up the tokens instead of the property itself is that it's actually more secure because everyone, has their own risk tolerance. And so you can have multiple owners in a single property, and some people may be leveraged and some people may have bought their position all cash. And if someone who's leveraged then can't pay the service the loan and they end up defaulting, the property is never at risk. There's no bank that steps in to then take over the property or anything like that, because the loan was done on an individual basis, right? The property itself is always purchased and owned all cash. So that's the idea we have and what we want to implement. And, where is that loan going to come from? The idea is basically similar to the liquidity pools and you being able to stake and lend out, your liquidity USDC for other people to trade with. And in return, you get really nice yield and you're able to make money that way. You'll now be able to essentially lend out assets for people who buy the tokens, and it'll all be operated by the smart contracts, code as law in this case. And so if they miss a payment, the code would execute and it would automatically, claw back the tokens that they bought, and it would give them to you. The person defaulted, and you can now then take them to the secondary market. And hopefully at this point, every property has a market trading enabled. And you can essentially sell them instantaneously to recover your principal, right? So that actually makes lending, essentially sort of underwriting your own mortgages or micro mortgages to people very, very easy, and actually a lot less risky than traditional mortgages are. Because one of the risks for a traditional mortgage is the default process. It's not very easy and not, takes a long time to sort of seize back the property from someone else who defaulted, right? And banks actually don't want to go through that trouble. And then when they do seize it back, they're not in the business of selling real estate. So they put it up, bulks of property in auction because it's annoying to then liquidate the property and get their cash back. So using this new process, it will actually be a lot more secure. And so when we start doing that, and hopefully that market takes off as well, not only will it boost trading, which will then increase our revenue, but we'll be able to offer and charge another source of revenue as, the loan servicing fee. We'll take a small cut of every loan originated, and it's continuously being serviced each month successfully and things like that. That would open up another revenue source for us.
Cool. Yeah, thanks so much for sharing your insights.
Mm-hmm.
And it's exciting. It's excited to hear that for future these financial tools coming.
Of course, happy to be here.
Yeah, no, that's a great feature. I'm glad that question came up and you shared that with us. That's something to look forward to. Is that 6 months, 12 months down the road? You're looking at that?
Yeah, it would be a pretty big endeavor, one of the larger features similar to the liquidity pool undertaking. And it's actually blocked by liquidity pools. We're not comfortable releasing something like that until every property has a pool, mainly because you need the instant liquidity as a recourse mechanism, right? So if someone defaults on their loan, you want cash back. You don't, maybe you like the property too, and you're like, oh, whatever, I'll just hold these tokens, good for me, I'm happy to keep them. But for most people, the assumption is you want cash back. So we need to ensure that for every property, whose tokens are being used as collateral, you're able to easily sell that collateral and receive cash back. And so until all the pools are launched, it just wouldn't be feasible to launch something like this.
Got it. Okay. Okay. Appreciate it. Well, we definitely appreciate your time. The rest of us are going to hang out for a little bit and talk about the kind of the onboarding process of getting onto Lofty. If people have questions, I want to cover that, but definitely appreciate your time with us, Jerry, and hope to see you again and maybe come back and share some new features in 6 months or a year, that kind of thing.
Yeah, absolutely. It's a pleasure to be here, and thank you guys for inviting me. As far as onboarding or anything else on the platform, if you guys run into any issues, feel free to reach out to our support team, and we'll make sure to take care of that for you.
Okay. Will do. Appreciate it.
Awesome. Thank you so
Thanks,
much,
Jerry.
guys. Have a
Thank you.
wonderful
Thanks.
weekend.
Take care.
You too.
Thank
Bye.
you.
All right, guys. Yeah, I think that was a lot of information. Do you guys have any questions on Lofty as far as getting onboarded, you know, the process, that kind of thing? I don't know how many of you have tried the process yet, or give me some feedback on where you guys are on that. Let's see. Richard, you had some really good
Yeah.
questions. Have you looked at the site, you know, set up an account, that kind of thing?
No, I haven't set up the account on the Lofty, but I have looked through the website very carefully to read all the Q&As to get some idea about the business.
Okay, I'm gonna paste this referral link in here in the chat, and that was the one he talked about. If you use that, then you get a $50 gift certificate when you sign up. And I think you just have to do a $100 transaction, and then that gift certificate gets activated. So not too bad. Okay. Susan, any more questions came up? I know you're always lurking out there.
It was very, very fascinating. I was suspicious last weekend, and now he's very clear, and it sounds like just a fun thing to do.
Yeah, and you can, I mean, I've got like $500 into it, and I've got 5 different properties, and I'm doing a little bit liquidity pool. So, and I actually did my first 3 properties transferring funds from a bank account. So you could do it without even touching crypto. So if you know you have any, you know, hangups with that, you can do it completely without crypto at this point.
Okay.
Good deal. Good deal. Okay. Victor, I know you joined us a little bit late. Any questions you had, or have you looked
Yeah,
through
I
it?
had a question. Regarding smart contract. How can I see a smart contract? Because I'm a technical guy. I would like to analyze the smart contract.
Yeah, it sounded like he wasn't necessarily publishing those. Did you get that same impression, Phil?
He made it sound like it's all visible, but somehow you wouldn't understand it.
Well, yeah, I think most of us, maybe Victor would, as far as that goes. Yeah, but what I would do, Victor, is create an account and then just buy one property, and then you'll have your wallet address, and you can look at all the interactions from your wallet address and see what happens there. Does that make sense?
Yeah, but I prefer usually to see the whole picture and then try in my own.
Yeah, I don't know where to tell you to go to get the address. Go ahead, Sam. Did you have another thought on that?
He did tell you that a part of the stuff that will be on the site. There's some kind of limitation, but there's also a chat box within the site that if you want to say or see something in particular, you use that chat bot. They're very good at getting back with you within 24 hours. So if you're really needing to see it, besides going to GitHub and things of like that, because it's also open source. So just individual contracts, because this is a business and everyone has some kind of privacy rights within the business. In the DAO, they don't release everything all all bits of information from all people's business. So there's some legal protection there.
Yeah, good
Yeah,
point,
but
Sam.
the
Thanks.
smart contract. Yeah, but smart contract is usually deployed on blockchain network, and it's pretty transparent. It doesn't depend
Yes.
on
Like
any
I said,
restriction.
it is open source. That's why I said the best thing you can do is go to that chat bubble, ask the question so you can see either the smart contracts that they will show you, they will show you the place where it's open sourced at, and then you can go ahead and view the open source contract because it's all open source, it's blockchain. But there has to be protection for other people, so you just, they are cautious, have some caution, KYC and all that other stuff. So you have to understand there's a bit of privacy with in some of these business blockchains because you have to be able to protect people's money and the value of these properties.
Right. So my point, Victor, was instead of going to the chat box and saying, what's the smart contract address for 123 Main Street? My strategy would be to go on the site, buy one token for $50 of 123 Main Street, and then you'll be able to see the interactions on the blockchain under your wallet address because you'll be an owner. So all the things that happen with that interaction, you'll be able to see, on the blockchain. Does that make sense?
Yeah, but can you show some picture? Where can I get this smart contract?
I can't know because I haven't done that myself, but I will show you my wallet. So if you can, you could theoretically, what I wanted you to do is to do it yourself under your wallet address. So then, when you did a transaction at 10:30 on Friday night, you can go there and see what happened. So let me go into my account and wallet. So, when you set up an account, you can go and take this wallet address and then go and search for it on the blockchain when you have your own address. And then you'll
algorithm scanner and check transactions or smart contract there.
Right. So just like let me copy it real quick here. If I can, there we go. So let me open up, and it was called like Para or so. Here we go. Let's see, Algorand Blockchain Explorer. So okay, so here's the balance, transactions, and all that kind of stuff. So my thought would be you do this for your own account, and then when you do function A, then you can look at the blockchain and say, okay, what happened when I did function A? And then do function B, and then you can go and see that there. Does that make sense?
Yeah, it makes sense. And as you remember, I asked a question about how many tokens were emitted. So usually you can see this information in a paper contract, right? So I would like to understand how many tokens for the certain property was issued and how to check that. Was it tokenized twice and so on. So using Algorand Explorer or maybe some other blockchain explorer, I can check just one token or one address and related transactions, but how about to check the whole property, right?
Right. Well, that by following your interaction through your wallet, it'll be interacting with the smart contract for that particular property. Then you could go look at that smart contract and see the transactions of all the other owners.
He did tell you that within the document is the details of the DAO, and the DAO will tell you how many tokens that property was broken into. So it's just a little bit of research on your part. If you go into the documents, you will find how many tokens that DAO has.
Yeah, let me show you that.
Mm-hmm.
So if I went to a property, I started at the marketplace, and I just picked this one right here. And then so I'm going to scroll down, and it's got the details, financials, order book, and documents, market. So I'm going to click on documents.
Mm-hmm.
Usually it shows at the, okay, here's on the details page where it defaults to. If you scroll all the way to the bottom, it's got the due diligence documents right here. So here's the deed,
Mm-hmm.
here's a title report, the operating agreement is what Sam just was talking about. So, you could look at that. So I think you need to go through the site a little bit and just look at all the info. And
why am I asking? Because any smart contract contains special variable, and this variable controls how many times the smart contract was executed. And every time this accumulator is increases by 1, in some cases, if it's limited and reached the maximum value, the smart contract cannot be executed again. In this case, it's a potential problem. I faced with such problem before, and that's why I'm asking about smart contract.
okay, so it sounds like that's beyond our technical knowledge,
Yeah.
at least those here. But hopefully you can find the contract and work through it there. Okay, looks like Michael, you joined us a titch late. What are your thoughts, or where are you at?
Oh, I'm just trying to figure out something new. And those are interesting returns right there, 25.5%. It'd be interesting to see if those are actually, they actually perform after a year. It's an interesting concept. That's the thing about this blockchain world, is that there's people are utilizing it for all kinds of things that when I first got into crypto in 2017, I would never have imagined. So it's pretty interesting. Again, I'm just trying to learn as much as I can, and I am intrigued by those returns. 25%. That seems reasonable, because I think when we were talking a couple of weeks ago, it was people were talking 8, 10, 12%, and that just really wasn't enough to gather my interest, but 25% is. So again, Brad, thanks for bringing something fun to the table for all of us.
Yeah, well, no, we got to thank Phil for bringing up the site, and
So, Brad,
they do.
Brad,
oh, go ahead, Sam.
let me show, because I actually have
Yeah,
my return from my Lofty account, and I've had my Lofty account since it first operated.
Oh, cool. Okay, yeah, go ahead, and you should be able to share your screen. Yeah, and Michael, while he's doing that, real quick, you get rent every day in your account. So far, I did some quick calculations, and they seem to jive with those numbers. I've only been in it for a month, maybe.
Well, I saw your thing there, and it said I think you said you put 500 in it, and it was like 567.
Well, yeah, I've got 5 in the properties, and then I've got some in the liquidity pools too. So I think the total was 900 or something. Anyway,
I did see that too. Yeah,
Brad, let me show my video.
Yeah, go ahead. You should be able to share your screen whenever you're ready.
Not my screen, my video. I'm on the phone, not on.
Oh, okay. So how do we do? You're gonna give me a link or something to go to launch it?
No, I'm just going to show you on my phone.
I'm sorry. Yeah, no, there was something going on. Yeah, on your video, and yeah, it turned up. Yeah, I'm sorry. Go ahead.
So, my Lofty account here. I don't know if you can see it.
I'm gonna make yours big for everybody. Here we go. So yeah, we did sit there for a second.
You saw it?
Yeah.
All right. So this is my return, my historical return.
Yeah, so
Is
that's an
about 20,
annual return over because you've been in it for like 3 years, it sounds like.
about to, yeah. So that's about 27% that I've had since I've been in this project.
Cool.
So
Yes, you have my attention now.
Yeah. Yeah, and it looks like you had 8 properties, so you're diversified.
yeah,
And yeah, so Michael, when I looked at the properties, and you can use this, I'm going to go back to share mine here. You know, you can say, okay, only show me things that are over, 13%, 13%, whatever. And then just kind of go with those. And I've tried to diversify in different states. And then I've done a couple of the ones that are focused on Airbnb, because those should be making more returns than a monthly rental. The short-term rental should be making more. And then I think I did I think one that was an apartment. I haven't done any commercial like a shopping center or anything like that yet. So good. Okay.
They seem to have some nice properties too, I'd say.
Yeah. These, and I'd like to talk to some property owners. He didn't quite answer the question whether I was looking for it when I said, what are the top 1 or 2 reasons people list their properties? And is it, so like, I mean, some of these are like, I think this one's like a $1.5 million property or something. But anyway, there's got to be some reason for them to want to give up part of that return. Maybe they're trying to diversify.
Brett, is that estimated price? Is that like per token?
Correct.
$57.97. Okay.
Correct. So I'm gonna look at the order book right here. So right now, there's people that are looking to buy, between 1 and 26 tokens, and these are the prices. And so I think that's probably based on the last order that was filled here, and having that liquidity pool for this property is where that comes in. Let me show you that, because we haven't talked about that, and I kind of stumbled across that, and I'm like, hey, this is cool. So if you go, where am I going? My account, lend and earn. Okay, so these are the different pools. There's a specific pool for each property. So let me see if I can find that one. Yeah, so here's that one we were just looking at. So there's 3,670 tokens for that one property. So if you multiply that times 50, that gives you a ballpark average there. This is the amount of money that's in the pool. And if you put money in this pool, this is what you're earning right here. And this is the annual rate. So if we look into the pool, it shows the value. This is almost half and half. In the pool, there's 54% of the tokens for the property, and then 45.8% of USDC. So this is where he's talking about, if you do a market order, that it would get executed right away because there's tokens in this pool to sell. And I believe there's, some, calculations going on to sell it at that 57.83 or whatever price type of deal. Phil, have you looked at these anymore? Do you know quite where that price comes from?
No, I haven't looked at this at all.
Okay, because this, I mean, I'm actually making more in here than I'm on the property. So I'm like, hey, this isn't a bad deal. And so let me look at my account. Okay, so here's my account in the pools. So I have these 2 properties that I've put money into. I've claimed, oh wow, I've got this much money I can claim. And I've claimed $3.32 already. So you may want to dabble with this. Yeah, like right here, I've got $276 in here and like $500 in the actual properties. So I'm kind of actually more excited about this area.
Does that mean that you're lending money to other people to buy these properties?
I'm putting money in the pool to conduct a transaction. Think of the currency exchange booth at the airport, that they're doing pesos to dollars for people coming into Fresno directly from Mexico. And so that guy needs, $1,000 worth of US dollars and $1,000 worth of pesos to be able to conduct transactions. And so, and maybe he charges 3% transaction fee. And for the funds that I put in, he's paying me one of those 3%. And that's how I'm making money. And obviously, the more liquidity that there is, the more business he can do. So if he's only got 1,000 of each, somebody comes through and says, okay, I want 1,000 pesos, $1,000 worth of pesos, he's going to be out. He can't do any more business for the next person that walks up. So he wants to have more liquidity to do that.
So there's actually multiple sides of this.
Well, there's two so far. And then when he talked about the lending thing, that's going to be something down the road as well. And I like that way he explained it, where if somebody defaults, it just sells their tokens. It's like, no, wait, I'll pay you next week. My mom's giving me some money. It's like, no, whatever day the smart contract kicks in, then you're done, kind of thing. Yeah, Victor, go ahead. I saw your hand was up there.
Yeah. One more question. I see here the total value is in dollars, right? At the same moment on the left side, there is USDC record, and the wallet address, as I understand, it's an algorithm network address. Am I understanding correctly?
Yeah. Yep. You're all right there. Yep.
So what is not clear to me, when you buy some token, it's on Algorand network. Algorand, it's not a stable coin, right? And the price of this token can be less or more. It depends on Algorand price. It's not a stable coin. At the same moment,
no. Okay, hold on. Let me stop you there. So what the price is
the price of token
it's not the price of the Algorand token, it's the price of the token for the property. So if we look at the order book here, we see that this guy says I want to buy one at $52. This guy says I'll buy two at $60. The last transaction was $57.96. This is the property token. It has nothing to do with the price of Algorand.
Yeah, my question, I'm usually faced with tokens which are on some blockchain networks. For example, Polygon, Matic, or Algorand, or some other tokens. So these are decentralized tokens. What token do you mean here? Is it different definition or what?
So let me explain it like this. Every DAO creates the tokens that you want to call it an NFT. I've always called it NFTs when I explain it to people, because the DAO itself is an NFT, and within that NFT is broken up into these pieces. Now they call it a token, which is not a token in the normal sense where we created these things. It's a token for the asset that you created, this NFT that you've broken up. So even though they call it tokens, it's not the tokens in the sense what you're thinking about Algorand, where it has a price marker. This is specifically tied to the amount of the property that you're investing. It's tied to the real world asset, the value of the property. So it's broken up like that. So it's attached to the price of the home. and all these different tokens or properties are affixed to the property that it's attached to.
And when I see a picture of your account, it reflects Algorand address. Am I correct?
Correct. Because this is all in the Algorand chain. And that was a great explanation, Sam. And I have a hard time with it too, because it's kind of like it's partly NFT and partly token. But if you look on the blockchain, you'll actually see the property tokens are tokens on the Algorand chain, just like you have different kind of tokens on Ethereum, Binance, that kind of thing.
So, for example, if you own one token, Algorand token, it's not the same as tokens on your platform. So the tokens on your platform, it's something different, and one Algorand token can express many tokens on your platform, right?
No, the Algorand token has nothing to do with Lofty or the properties. It just that's the blockchain that this site and system uses. You can transfer Algorand tokens into your wallet, and then they convert them into US dollars when you go to buy a property token. But don't think of it as an Algorand. Just put that Algorand token or coin out of your head, because that has nothing to do with anything on Lofty.
So, as I understand, you have two wallets. So one wallet is for Algorand, and it reflects the Algorand address, and the second wallet is a wallet for your platform, where I can see the total Lofty tokens, right? The total amount of Lofty tokens I bought before. This is a little bit confusing.
Yeah, when they say the wallet, when you click on wallet there, it actually shows.
Is it a hot wallet or a cold wallet?
It's a hot wallet. It's a hot wallet because they have the custody is with Lofty.
Mm-hmm.
You can get your private keys and all that off of there if you wanted to put this into like a MetaMask or something like a wallet like that. But it's a hot wallet because it's on, it's on the blockchain, internet live, the whole thing.
That was a big question for me, because usually when the coin is not stable, the price can be different, but you express the total price in dollars or token price in dollars, and you should get some information to support the actual price, actual market price for this token or for this certain property. So that was a question.
Yeah. So all that happens here in the marketplace on the Lofty website. And it doesn't have anything to do with the price of Algorand. Now, if you send over 1,000 Algorand coins into your Lofty wallet, on the site here, that may be $5,400, and tomorrow it might be $5,200 or whatever if you keep it there. If you keep it in Algorand versus having it in switching it into USDC.
So you use Algorand only to fix some information on blockchain that you are the owner of, for example, 20 Lofty tokens, right? So it's some kind of proof. It's some kind of proof. No,
the only thing that you're doing with the Algorand coin is using it to fund your wallet. So you can either, put $5,000 in Algorand coins in there, or you can transfer $5,000 from your bank account, that kind of thing. And it's just a way of a funding process. It's like if you go to buy a pizza, do you put it on a debit card, you put it on a credit card, or do you pay cash?
I fully depend on your platform, on your account, because it was not assigned with a bank account. I mean, once I convert my money or convert my cryptocurrency and fill my hot wallet on your platform, so your platform is responsible for that amount of money, right?
That's all
it's
correct.
Not a bank account. It's
right,
not a bank
right,
account,
right?
right?
That's all correct, except it's not my platform. I wish I came up with it, but it's Jerry's platform. I'm just an investor, just like
no, it's
Sam
hypothetically. It's hypothetically question, right? About any platform. So once I get some money converted into your money, like or platform money, right? It's not a bank money. It's not my money. It's a platform money.
in a sense, yeah, in a sense, because they've created the tokens, like Sam said, for each individual property. When the DAO was created, there's so many tokens, kind of thing. So yeah. Okay, cool.
Thank you.
Cool. All right. Any last minute thoughts, guys, or questions? Oh, come on, Phil. I thought you were going to close us out with a good strategy or something.
I have all the same questions Victor has, and the reason I purchased just a handful of tokens was so I could do exactly what you said, Brad, is that I would have some addresses that I could go in and poke around and try and figure out how all this works, because this whole bridge between the real world asset and crypto is kind of a mind bender, and so I just haven't had time to do that yet, but if and when I finally get to it, I'll be glad to come back and present my learnings.
Yes, this might be something maybe we revisit every 6 months, even with a 15-minute update, during a regular meeting or something like that. But yeah, so like I just pulled up this quitclaim deed here, and so like he was talking about, these are the legal documents, that are recorded, and this is what, what's going on. So you had this Tristan Huerta grant to this DAO LLC. And my question was, it looks like Tristan granted the entire 100% of the property to the LLC. So my guess is that, I don't know if he or she ends up owning 80% of the LLC if they're willing to give up, if they're looking to sell off 20% of the equity. And then maybe down the road, they can update the operating agreement to say, okay, Tristan's going to sell another 10% equity. But looking at this deed, it looks like they transferred the entire property to that DAO, as opposed to, there's a way to do this, in legal terms, you could say that he transfers a 20% interest, type of thing. And that happens all the time when, maybe a grandfather gives 25% of a property to each of his 4 grandkids, or, something like that. But to me, it looks like they're giving the 100% of the property to this DAO. So my next step is going to go to read through the operating agreement for that DAO, and that should show us how much percentage they're actually selling off, type of thing. So good deal. Okay, well, Michael, I hope you can join us tomorrow. I don't know who else. Sam, oh, you're local.
I'll be there.
And Susan, do we know where you are, or have you even given that up? Are you local? Can we see you in person sometime?
I'm in Fresno. I always plan to go, and then Sunday afternoon comes and I'm just lazy. I'll try to go.
There's pizza, so.
I know.
That helps.
Yeah, and if you come late and leave early, that's okay. And we just sitting at the tables chatting is what we're doing. There's no PowerPoint or anything like that. So
yes, it was fun.
Good. All right, guys. Well, I need to put up the next meeting. Looks like it's going to be the second Saturday of the month. I haven't got a topic yet. We kind of had a bunch of topics queued up. So if you guys have any thoughts of what you want to talk about next month, let me know. Otherwise, I will come up with something and we'll go from there. With that, I will bid you adieu, if that's the right terminology.